Joining us now on the phone before he hops on the earnings conference call is T-Mobile CEO Mike Sievert. Mike, it's great to have you on with this instant reaction. You continue to take market share this quarter. I guess walk me through that. You said record low churn as well. Walk me through that and whether you can continue to do that as Verizon and AT&T are aggressively looking to add capacity and aggressively looking to roll out more 5G of their own in the coming years.
Hey, Morgan and John, thanks for having me. Well, what investors look for in our market is service revenue growth, not so much on the total revenue line, because service revenues are where all the profits are made. And on that, we not only beat consensus, but beat the whole industry on year-over-year growth again. And, the formula for that's so simple. It's because customers are switching to T-Mobile more, they're staying with T-Mobile more, and they're buying up our rate card, with our most popular plan being a premium plan. And, boy, that churn number you're asking about, that is historic. First time ever beating the industry, T-Mobile customers being the most loyal in Q2 and the lowest churn ever in our history.
And when we talk a lot about inflation and the fact that consumers have at least, so far been, quote unquote, resilient in the face of it, what are you seeing in terms of some of those spending patterns, even as you do continue to take market share?
Well, T-Mobile customers want more of T-Mobile. And so what we're seeing is that our premium plan, our brand new Go 5G Plus plan launched in the quarter, is already our most popular plan, with more than 60% of customers choosing it or a similar plan. And so they want more of this network, and there's a reason for it. It's the fastest and most expensive 5G network in the country, with more than twice the performance in terms of speed of our next nearest competitor.
Mike, so there's concern in the industry right now that you can sort of grow subs at the rate that people hope, or you can grow ARPU, average revenue per user, but you can't do both. Can you do both?
Absolutely. And, you see that in terms of what's happening in the market for us. Overall industry growth moderated this quarter, as people expected it might, and yet T-Mobile delivered the biggest Q2 in terms of postpaid phone net additions in 8 years, amid a moderating market. And we're guiding to stable ARPU, which was actually up sequentially. And so, that's driving top service revenue growth that's the best in the industry, and it's translating into double-digit and industry-leading EBITDA growth, as well as the best cash flow conversion in the whole industry for the first half.
That's, Mike, what I wonder about the direction of ARPU. Stable, but as we head into Q4, how much kind of discounting do you do, subsidies do you do to get people onto high-end plans? Can you get them on the higher-end plans when so many consumers in so many areas of the economy want to trade down and actually increase ARPU this cycle? Or should investors expect stable and then growth in subs?
Yes. In fact, our consumer ARPU is rising. The only reason that we report generally stable ARPU is because we're just killing it in the business sector, where we're bringing on profitable high CLV ads at a slightly lower revenue per customer. It's a great trade to have. So overall, it's just a healthy dynamic where customers want more of T-Mobile, and we're stepping up and providing them with what they're looking for.
Yeah, more broadly looking at the sector, the lead cables have been a big focus, specifically where AT&T and Verizon are concerned. Investors very concerned that there's going to be a lot of spending and potential blowback where investigation and maybe removal of some of that legacy old landline infrastructure is concerned. I mean, you don't have that. You're a newer network. Are analysts right to think that you don't have exposure to this? And if you don't, is this a situation where perhaps it continues to benefit you as you continue to invest in your own network?
Well, the premise of the question is spot on. I mean, we're a pure play wireless company, so this isn't our issue. But that being said, I know our competitors are dealing with this, and, I'm not an expert on the topic, but you'll have to ask them, what they're facing and whether it's real or not. But to the premise of your question, yeah, this is just not our issue at T-Mobile.
Got it. Mike Sievert, thanks for joining us.